Good afternoon. Thanks for joining us today. We have Moneta Porcupine presenting. CEO Gary O'Connor is here with us. It's the first time that they've presented with Adelaide Capital, so I'm really excited to hear the story. They just put out an updated resource, which is, very excited to hear about. Before we get started, I will remind everyone that there will be a Q&A period at the end. So if you have questions, feel free to put them in the Q&A box at the bottom, or you can email them to me at deborah@adcap.ca. Or if you're watching from YouTube Live, you can leave the questions in the chat box there, and I'll check there. And this presentation, as always, will contain forward-looking statements. If you'd like to know more about those, you can check them out on the company's disclosure on their website. And with that out of the way, I'd like to introduce Gary O'Connor. Hi, Gary.
Hi, Deborah, and thank you for the opportunity to be able to speak today.
Yeah, I'm really interested in hearing what you've got going on in Timmins. So why don't you give us a little bit of background on yourself and walk us through the story?
Okay, excellent. Okay, so I'm actually a geologist. I had 38 years experience. I was, 25 years actually running projects around the world, and then 10 years on Bay Street on the buy side, doing due diligence on numerous projects. And I've been the last 3 years with Moneta Porcupine, and we're looking, to roll out a whole new story here. And we've been putting a lot of effort into over that period into, rolling out this new resource, which has just come out. Now, Moneta Porcupine it's a Toronto listed company. We're on the main board, the TSX. We're under the ticker ME. We are a gold exploration company. Our focus is in the Timmins Camp, Ontario, Canada. It's an area of, great sort of gold wealth. Is Canada's most prolific gold mining camp, and we're lucky to be sort of one of the few juniors with a large land package and a sizable resource and a growing resource in the camp. I do point out that we do have forward-looking statements in this presentation. We will be talking mostly about our Golden Highway project. It is located 100 kilometres east of Timmins on Highway 101, which is the Golden Highway. We just put out a significant resource update. We have a major underground resource totaling 2.8 million ounces, a large open pit resource, 2.7 million ounces. This gives us a lot of development options going forward, both high grade and at surface, lower grade ounces. We put out a very attractive PEA earlier this year on Southwest, our largest underground resource. This outlined the economics of the underground gold resources and has given us good guidance moving forward. We had a number of new discoveries earlier this year in our drill program. A lot of the drilling we did early in this year has resulted in the resource update. We've identified a lot of regional scale potential, and we are currently drilling on to test this potential and to continue to expand our resources. We own 100% of the land package. It consists of 6 gold projects. Today we'll just talk about one, the Golden Highway project, but we have 5 others in the Timmins area. We also have a 50% joint venture on the Garrison project with Kirkland Lake Gold. We are currently focused on our 100% owned land, but that project does give us some options moving forward. I will point out we have no royalties or encumbrances on any of our resource areas. The new resource that came out, 2.1 million ounces of gold in the indicated category and 3.2 million ounces of gold in the inferred. That resulted in a 217% increase in indicated ounces and 141% increase in inferred resources. The company itself has just over 340 million shares out. As of the end of trading on Friday, we had a market cap of 86 million. We have very few options and warrants out, so there's not a lot of dilution overhang. We have a good, strong cash position. We have enough cash to complete our major drill program over this winter and into next year. We have good analyst coverage. Don Blythe, George Topping, and Kerry Smith have given us some good analyst reports. We have good institutional ownership as well. Eric Sprott has 10%, K2 Fund has 10%, Scotia, the Sprott Funds, Dundee and Mackenzie all have 6 to 7%. So We've got some really good shareholders, institutional shareholders who have backed us and are continuing to back us as we move forward. We're a very strong board, lots of good management skills here, lots of experience in finding, discovering, developing, selling, and operating mines. So we have a good diverse skill set to meet the challenges ahead. Timmins is Canada's most prolific gold mining camp, produced over 85 million ounces over the last 100 years. Excellent infrastructure, roads, electricity, skilled workforce. Within 100 kilometres of our project, there are 7 mills that could process and produce gold from our project. Golden Highway is shown here, 100 kilometres to the east. The joint venture with Kirkland Lake Gold is the hatched areas here, and that we do have some good upside potential there, which we will be pursuing in the future. The other 5 gold projects occur in and around Timmins itself. This map shows the outlay of our current resource. So this is the new resource that came out last week. We now have 2 open pits. One is the Windjammer South open pit developed in this area, and the 55 open pit to the west. We did not update the southwest resource in this resource update. That was updated for the PEA that came out in September. We did add the new Westaway discovery. So we added a good 660,000 ounces at Westaway. And we did update the Discovery and Windjammer North deposits to the north. And these were incremental increases, but the majority of the new ounces came from Windjammer South, Westaway, and the 55 zone. Geologically, we sit in a transgressive basin. It's a Temiskaming age clastic sedimentary basin. Unique thing about this basin in this belt is we have a large banded iron formation which rolls up through the middle of the basin. Our mineralization has been defined to date. It occurs in extensional veins located in a coarse-grained sandstone which occur along the contacts with this regional banded iron formation. We recently found a repeat of that banded iron formation to the south of the basin, so we think we may have a repetition of the good host rocks, favourable host rocks to the south of the basin. We will be testing that going forward. But the real focus of earlier this year was expanding. This is the old resource footprint, 2 kilometre strike length. What we did was confirm 4 kilometres of continuous mineralisation over the same gold trend. And that has resulted in a significant resource update. And we are currently drilling to the east, within the extensions of southwest, and new discoveries to the north as well. So we'll be looking to continue to expand this resource. The new resource update is broken down into open pit and underground and indicated and inferred resources. Here we can see the new open pit resources, 2.7 million ounces, 2.8 million ounces underground, including the new Westaway West Block discovery, over 660,000 new ounces at over 4.7 grams per tonne. Remember, we did not update Southwest in this resource update, but we did the other deposits. We used a variety of cut-off grades. For the open pit, we used 0.3. For the Southwest, we use a 2.6, but for our resources not yet subject to an economic study, we're continuing to use 3 grams per tonne. We use a minimum 1.5 metre width on the steep veins and 5 metre on the lower grade flat veins. We used $1,500 gold at a 0.77 exchange rate. We capped on raw assays varying from 6 to 37 grams, depending on the deposit. Composited to 1 metre. We used ordinary kriging for the block model estimation, constrained within geological wireframes that were developed from re-logging and logging of core. We used search radius, generally 60 metres in the steep veins, higher grade veins, and 90 metres in the wider, lower grade veins. We used variable bulk densities depending on the deposit, which averaged 2.77 over the entire deposit. This shows the deposit prior to the update, shows the area where we've infilled with the Westaway veins. This is all underground at Westaway. It's all at a 3 gram cutoff. Underground mining assumed. There's only at Windjammer South and 55 that we did open pit resources using both the flat lower grade veins in our geological model and the steeper higher grade veins. Those are constrained within pits and have been estimated at a 0.3 cutoff. Remember, we did not update Southwest, but Southwest does remain open. You can see in the eastern end here, there are a number of veins open to extension, and we are drilling there now. So we're looking to expand to southwest in the new resource update, pending, next year. I should also point out the flatline veins that we've modelled at surface and Windjammer South do trend into southwest. We are currently updating those, and we'll be modelling those, and they will be included in further resource updates as we move forward. Underground, we've underground resources, 2.8 million ounces, 0.63 total indicated, 2.13 inferred. We have great potential to extend the resources at Westaway, Southwest, and Discovery. The open pit resources, 2.7 million total, 1.5 indicated, 1.2 inferred. And we also see the ability to extend these, notably at Windjammer South, into the southwest area and to the east, where we're currently drilling in the halfway area. A look at a long section at the new resource. This shows the wireframes at Westaway. Remember, this is a brand new discovery, 4.37 million tonnes for 660,000 ounces. This is the southwest deposit, 1.8 million tonnes. This was 1.8 million ounces. This was not updated for this resource, but this is the area in here where we have potential to expand this. Windjammer South pit to the east. Remembering these flatline veins do extend into southwest, and we will be looking to drill out this gap here and extend those veins into here and potentially extend this pit, and the 55 pit to the west, and that also remains open. A look at the 55 pit to the north. We are bounded by geology. This is a splay of the Destor-Porcupine. To the south, however, this is constrained by drilling. So we have a lot of waste being defined here, and that's just due to a lack of drilling. We'll be infilling this going forward. Also to the west and the east, again, drill constrained. We'll be looking to convert this into ounces and resources with additional drilling to the east and the west. This is a oblique view of the 55 pit. Again, this shows the area to the south. So it's just a lack of drilling in this area, and that we'll be looking to expand our resources there, as well as extend the resources to the west and to the east. A long section at 55, this highlights the issues I was pointing out. You see a lack of drilling here to the west. On this section, we do have blocks, but on a number of other sections, we do not have blocks on the west and, additional to the south. And you can see there's areas in here, high grade, requires some infill drilling to extend some of the high grade blocks in some of these areas. So we will be drilling this, next year and looking to continue to expand this resource. This is the 55 pit. Again, we have a geological, this is the banded iron formation. That is a hard boundary on our flat veins. We have two banded iron formation units that come through here. However, there's a whole area to the north that has not been drilled. So none of the flat veins were modelled there. We know there is mineralisation there, so we need to drill that, model those veins, extend those resources to the north. They are also open to the southwest and to the northeast. So we'll be looking to, again, extend the mineralisation and the resources on this deposit and getting the strip ratio down. So we got, 2.1 million ounces contained in this pit and a strip ratio of 6.3. This shows this long section with a view to the south, shows the flat, gently steeping veins here. They're up to, as mentioned, 50 metres wide. They can be up to 400 to continuous mineralisation within drill holes in the core part. Earlier this year, we drilled out the extensions into both to the west and to the east. And we now see that we have further potential to extend these veins further west into the southwest area and to the east. So we have been drilling at halfway, which occurs out here. And we published results earlier this year with some good high grade and some good wide, lower grade flatline veins. So we'll be looking to extend the Windjammer South both to the east and to the west, modelling both the steep veins and the wider, flatter, shallow dipping veins. The resource itself, we added 1.5 million ounces in the indicated with this resource update. That's over 200% resource increase in ounces in that category. We added nearly 2 million ounces of inferred for 141% increase. So we're very happy with that. And again, at good grade, both for the underground and for the open pits. Looking at the underground, looking at the cut-off sensitivity tables, 3 grams per tonne. Remember, at our economic study at Southwest showed about 2.6 to be the economic cut-off. We can significantly add more ounces with an economic cut-off. For the open pit, 0.3 was used for the cutoff grade. Probably we don't add a lot of ounces by lowering the cutoff. However, we do have the optionality moving forward. A lower grade cutoff, there's not many ounces between 0.5 and 0.3, so we could be high grading this, stockpiling the low grade ore and putting much higher grade material through the plant through any development option going forward. Just a quick review of the cutoff grade, how these were calculated. We used a 3 gram cutoff for the underground, using $1,500 gold, a 0.7 exchange rate, and a conservative 92% recovery. Remembering the Southwest PEA used a 2.6 gram cutoff. For the underground, again, $1,500 gold, a 0.77 exchange rate, 92% recovery, and this actually equates to a 0.29 gram per ton cutoff. We actually rounded that up to 0.3. Remember at Southwest earlier this year, we did a PEA. This was done to show the economics of our underground resources. There's a lot of companies out there with gold in veins in Canada. We wanted to show that these were economic. We showed good wide stopes, 8-meter wide stopes. We could show the ability to bulk mine this long hole open stoping, producing nearly 80,000 ounces a year at a cash cost of only $590 US an ounce, all in sustaining at 747 with reasonable capital, good cash flow, and very good payback period. So we can now apply this to our new discovery at Westaway, where we have similar sized veins. We have veins that are up to 30 meters wide. We're expecting similar sized stopes, and we think similar economics will apply there and for the development options moving forward. Looking at our valuation, we're up at over 5.5 million ounces, a weighted average grade of over 1.6 grams per ton. We're trading at less, about $12 US an ounce, significantly below all of our peers in North America. So we still have a lot of upside. Our stock price has moved in the last few days, but it's still significantly undervalued. Looking at Precedent transactions, again in North America, what companies have been paid for ounces, we're way down here, $12 an ounce, lots of room to get anywhere near the average, which is, over $200 an ounce. And of course, the current market trades at about $55 an ounce. So we're only at $12 an ounce, so significant upside there for reevaluation in what is a very good safe jurisdiction, Timmins, Ontario, Canada. The plans going forward, we're going to continue to add value. We're doing the regional drilling now, testing new targets, looking for new discoveries. We're going to drill 20 to 30,000 meters this winter. A lot of the drilling will be focused on resource expansion. We'll be looking to expand Westaway, which is wide open, looking to expand Southwest, as I mentioned, at the Gap area, which is open, as well as expanding the Discovery and Windjammer South deposits. We'll be modeling the lower grade gold tenure event at Southwest and linking that to Windjammer South, looking to expand that pit considerably. And remember that we'll be drilling infilling the pits. So we'll be lowering the strip and increasing ounces and thus improving the overall economics at the 55 and Windjammer South pits. And we'll be doing resource updates at the culmination of this drilling and the compilation of results and the new interpretation moving forward next year. Quick look at where we're drilling from an exploration viewpoint. We have been drilling, as mentioned, it's halfway. That the point is there is to extend Windjammer South to the east, Halfway Lake, and this new area we have at East Fold. This is a folded portion of the BIF, so we're testing mineralization in this area here. We will be drilling the extensions of Discovery. We've got some nice targets at Twin Creeks and Landing Zone, which we'll drill test. And then the majority of the drilling will be all about resource expansion. Westaway, West Block, the southern parts of Southwest, and of course the area between Southwest and Windjammer South. Remembering, we will be attempting to connect Westaway to the southern basin. Remember last year we had a brand new discovery here, good mineralization and the same style of veining and the same host rocks. Remember we have a repeat of that banded iron formation on the southern margin. So we're quite excited about going down to drill this area. We have a repeat of those favorable host rocks. Being in Timmins, we have a very good pathway to production. We've significantly increased our resources this year. We completed the PEA, we updated the resource yet again, significantly increased our inferred and indicated. We'll be looking to expand our resources again next year. We've already commenced drilling. We have 2 rigs mobilised already. A 3rd one is on the way. We'll be looking to add a 4th. We'll be finishing that drilling over the winter, doing a resource update, Q2 next year, reworking the model and our geological models Q3, and then we'll look at a PEA. Conceptually, we now have the potential for 2 underground operations, each producing, up to 80,000 ounces a year, and also producing from 1 large open pit. We've already defined, 2.7 million ounces in open pit, looking to expand that. So conceptually, we could be looking at something well over 350 ounces per year. Remembering that we'll be able to blend this ore. We'll have good high-grade ore from 2 underground operations at a 4 or above grams per tonne, blending that with 1 gram material from the open pit. So we have a weight average gram well over 2. This reduces our capital intensity, reduces the size of the plant required, and thus improves the overall economics. So we see this as very positive steps moving forward. And just to highlight the points, again, remember, this is a very large resource. It's a growing resource in an extremely safe jurisdiction. No royalties or encumbrances. We've shown the economics. We have a great working relationship with the Waigashig First Nations. We have an exploration agreement in place with them, and they're doing a lot of contract work with us. They want the project to go ahead. We see a significant production profile. We have both underground and open pit resources giving us optionality, high grade, at surface, readily accessible ounces. We have new gold discoveries, and we see regional scale potential, and we already see the potential to significantly add to our resource base. And at the end of that, there's a very short timeline to production. So thank you. And if I hand this over to questions. And
thank you very much, Gary. And I apologize. Somebody just started jackhammering next to my apartment. So please forgive the background noise. I'll mute myself when I'm not talking. So how fast could these projects be permitted? Have baseline environmental studies been completed?
We have started the baseline environmental study. So we're well over a year into that. You need 2 years of baseline data to commence the permitting process, and we're well over a year into that. So we'll have enough baseline data collected by the time we do our next resource update and do our first, an updated PEA.
When do you think you will need to raise cash again, and how much?
Well, we have enough cash for our current program, the 30,000 meters, the resource updates for next year, updated metallurgical test work. Will be our current planners will still be ending the end of next year with a significant amount of cash. So at this stage, we have no immediate plans to raise, and we have enough to continue to expand this project going forward.
You have quite a number of warrants outstanding that are in the money. What's the expiry on those, and is there any forced conversion?
We actually only have a few. There's only 3.5 million, and they're priced at 19 cents. They are currently in the money. One set actually expires. About half of those expire this year, and the other half are next year.
So you talked previously, Gary, about southwest potentially being a ramp or decline, not a shaft. Construction, what about west away?
I think west away is very similar. So both southwest and west away, they do come to surface, or the paleo. So remember, we're under about 20 to 40 meters of overburden here. The PEA showed a decline coming from the southeast and accessing the ore, at southwest, at the end of the decline. The decline makes more sense. It's quicker, cheaper, and easier to put in, and it doesn't have the bottlenecks of a shaft. Gives you more optionality, and it's much more efficient for the first, say, 1,000 meters depth. After that, of course, you'd be probably looking at a shaft. For west away, very similar style mineralization, same extensional veins, looks like the same kind of widths. We're getting up to 30 meters wide, and it'll come down to a question of whether we do 2 declines from the south, or whether there's one larger decline and then you do a crosscut and feed into. So it'll come to a sort of a cost trade-off, and also not wanting to create a bottleneck in one decline versus 2.
Okay. And can the open pit be operated as a toll operation, or do the economics require a plant on site?
I think the economics would be better with a plant on site to haul, 1 to 1.3 gram per ton dirt any significant distance. It starts losing its its economic value. You're best to process that on site, but we do have the potential to be underground mining, shipping and toll treating higher grade ore earlier while we develop the open pits, build a larger plant, get cash flow going. So there are all these options that we can explore.
And was the decision to include open pit resources in the recent resource estimate a function of the higher gold price or additional drill results?
It was a combination of the both. So we actually started this program last summer. So we started modeling. We relogged all of the historical core. Remember, we have over 350,000 ounces of core in our core farm here in Timmins. It's all catalogued. It's all in good condition. A lot of it's oriented. So once we'd modeled up the steeper high grade veins, part of the geological process there, we had identified the lower grade earlier set of mineralization. So we spent last summer modeling this up. We came up with a good geological model. We spent this last winter test proving that. And we did drill step out holes. So we stepped out away from the historical centers of mineralization. We did a lot of step outs at Windjammer South at 55. And to be quite honest, the market didn't like it. We were putting the results out now. Share price was going down. They did not appreciate what we're doing. However, it's proved invaluable because we're able to confirm the orientation of these veins. We're able to predict them. We're able to intersect them. We've now modeled them. We're able to constrain the grade within these structures. We've got the grade up at least 20%, both at 55 and Windjammer South from historical resources. And it has helped the overall development of the pit. And the gold price did help as well. So yes, we can't ignore that as well.
I had a question about the iron formation. Is that economic, or is it just that this geology is what hosts your gold grades?
The geology is actually mostly hosted within the adjacent coarse grained sandstone unit. So we have a coarse grained sandstone unit, which immediately overlies the banded iron formation unit. And the main one we look at is this banded iron formation A unit. On top of that, there is a conglomerate. It's 2 to 3 meters thick, and then a 2 to 300 meter thick coarse grained sandstone. And it's the mineralization is mostly hosted in the coarse grained sandstone immediately overlying the banded iron formation. There's not a lot of mineralization in the banded iron formation itself. It was quite ductile. It was quite soft during deformation. You see a lot of tight folding in it, and it wasn't brittle enough to be fractured as per the coarse grained sandstone.
Okay, and I had a number of questions about consolidation in the district. How likely is this? And I guess the other side of that question is, do you want to build a mine, or are you looking to be acquired in the future?
Well, there's been a lot of consolidation in the area. Newmont has acquired Goldcorp. We had Pan American Silver acquire Tahoe. So there's been, major consolidation events have happened. For us, we're an exploration company. We're growing these resources. We still see the ability to continue to grow these into a much larger resource. We will, we'll do the required studies, the incredible baseline work to continue to de-risk this and move it forward, and the required studies that will lay out the development options. At that stage, we'll look at, which path we need to take in regards to, completing, pre-feasibility studies, feasibility studies, but we feel we have the ability to do all that and continue to add shareholder value, to our investors.
And talking about shareholder value, you're extremely undervalued versus peers, as you showed on that one slide. What steps are you taking to fix that undervaluation, and how do you look at that?
With the new reiteration of the resource, it's all happened quite recently. We really only put out the first large resource at Southwest last November. We got to 1.5 million ounces there. We then rolled out that PEA, so that was all happened very recently. This resource has just come out, so we're now embarked on a major IR program, engaging with yourselves is one of those steps. So the idea is to get the story out, to show people what we have, but it's all happened quite quickly. So sometimes it takes the market, there's a lag. We do see some, we've had some positive response to the new resource. We're looking to keep that momentum going. We'll have positive drill results, over this winter. We'll be able to show the continued growth of our resources. We'll model up, the additional ounces in and around Southwest. And so we can see this continuing to grow, continuing news flow. And if we get that momentum and the markets paying attention, we'll look to continue to add value.
So this is an opportunity for investors to participate in the re-rating post the updated resource. Exactly.
We're still very undervalued, and of course the big resource jump did catch the market unawares. I don't think anyone was expecting quite the size of the resource update, and it was a little larger than we'd initially thought. We actually pulled more ounces than we were using in our internal models, which were quite conservative. So it did catch people unawares, but we're starting to catch up, get that re-rating, and we hope to continue to keep it moving, because these are some of the cheapest ounces out there at the moment from a valuation viewpoint.
Well, it is a sizable resource that you came out with. In terms of your strategy for drilling going forward, is part of the plan to high grade some of that resource?
Well, we will continue to focus on the higher grade zones. So Westaway is wide open to the south. Remember the last drill hole here last year, hole 120, was a 30-meter intercept at 3 meters, had 12 meters at 5.5 grams. That is wide open to the south. So we'll be looking to continue to expand out the high grade underground resources, as well as extend the open pittable material. So we'll do this in a two-pronged approach.
I had one other question about the potential for a tier 1 project with SW producing 80,000 ounces, Westaway 80,000, and an open pit with 200,000 ounces, so total annual production of 360,000 ounces. I believe you spoke briefly about this on a call last week. How could this be phased? What would the timelines be, and how realistic do you think this scenario could be?
Yeah, I think it's totally realistic. We now have two open pits, only 4 kilometres apart, actually less than 4 kilometres. There's 2.7 million ounces. We have about 2.5 million ounces just here in underground resources within veins that we know are economic. We know we can put declines in. We know we can use bulk mining for both of these areas to do it economically. We could augment that, with open pit material here. We have good recoveries for these. It's free milling gold. It's not a lot of cost to develop an open pit. We have the option of developing ramping this up, maybe doing a underground operation, toll treating first, or doing a starter pit first while we develop the underground declines, ramping up production, expanding the mill. There's a number of ways we can develop this and sequence the development of it. But it's still it's early days. We're still on the resource drill out phase, and we're still expanding the resources. We could drill out some better options moving forward here.
Okay, I don't see any other questions. I'll give the audience a couple minutes to input any additional. And maybe you could just outline some of the catalysts investors could expect over the coming quarter or two.
Okay, so the catalysts over the next quarter, the main thing will be the exploration drilling. As mentioned, we're going to have up to 30 meters drilling. We'll be drilling the extensions of Southwest. We've been drilling the new areas, new discoveries, Halfway Lake, East Fold, Twin Creeks. The rigs are there now. We have the extensions of Discovery. The down dip extensions are being tested. In the core of the winter, we'll move the rigs into the extensions of Southwest and West Block, as well as the South Biff. So it'll be a good continuous news flow. We've just put the resource out. Good news for the next, probably 5-6 months on drilling. And then we'll be looking at a resource update, and we'll be giving, guidance as to how our drill results and have been successful potentially, and, and continuing to grow our resource.
Well, it seems like a really exciting time for Moneta. Like, congratulations on the resource update and the PEA you put out a couple months ago. I think it's an interesting time for investors to be looking at the story. I know a lot of investors are coming back to the gold trade, and hopefully we have a bit of a run next year. Any final comments that you want to leave the audience with?
Yeah, I think just a reminder, you know, we're Ontario based. We're in very infrastructure rich area, no royalties. We own everything 100%, and it's a growing story. It's a great, you know, this is a great discovery and, you know, compilation of resources, you know, historical drilling and resources for Canada, and a great, you know, addition of wealth to the country. And we're well undervalued, you know, $12 an ounce and a lot of upside and a growing resource. So we think this is great for the country, and it's going to be great for our shareholders.
I agree with you. Great value in a safe jurisdiction with a great management team, and 5 million ounces is sizable. So congratulations. If anyone has any additional questions, feel free to reach out to me and I'll get them answered for you. And Gary, sorry to torture you with the background noise. I think you did really well.
It's not a problem.
Obviously, because now we're done, they're done. So
I hope the bathroom renovation goes well.
Oh, it's not mine. I don't even know where the noise is coming from. My neighbors.
Not a problem.
Anyway, thank you very much. And yeah, I look forward to following the story as you progress and drill more.
Excellent. Thank you. And thank you everyone for taking the time to listen. Excellent.
Have a great afternoon. Bye.
Thank you.